Welcome to the Pump and Dump channel. Today talking again about the shipping industry and Nordic American tankers. A stock I had mentioned yesterday that I was feeling a bit iffy about and I was considering selling, and I did so today. The reason to sell, it really is twofold. It comes down to the valuation of the company and the leverage involved in the company, and comparing that to the long-term outlook for Suezmax tanker rates. So the news releases, of course, that came out were very nice. The one 2 days ago mentioned that spot rates were at 68,000 per day, and it also mentioned that it was temporary and it was due to strong refinery demand. And going into November, this happens usually every year. The demand for crude oil by the refineries, it rises substantially before the turnaround happens. The turnaround is when they shut down and then they do whatever they need to do. So the demand often spikes before the turnaround, and then during the turnaround or after the turnaround, it kind of falls off a cliff until they finish you know, until they have turned around, right? So I think that this spike in tanker rates is short term. Of course, we're only in October. November is still far away. It's conceivable that this stock can rise another $2 or so in the next week, and if it does, I will have left quite some money on the table, but that's okay. The reason to exit is based upon the long-term outlook. I think that the stock price, if we look at it today, it's between 350 and 4 approximately, and what that kind of reflects is a long-term view of Suezmax tanker rates between 44,000 on the low side and 45,000 on the high side. That's kind of what I've calculated, and I'm thinking that 45,000 over the long term is a bit stretched. It would be very optimistic. And the reason for that is I've mentioned the operating costs for Nordic American tankers are around 30,000 per day, and if you look at other companies, they have similar operating costs. Some are a bit lower, some may be a bit higher, but when you're looking at a 50% margin, any company who would think that this is based upon a shortage of vessels would order more vessels to take advantage of the spot rate that exists at this point in time. But if it's a short-term squeeze due to the turnaround, they won't order new vessels to take advantage of this. So that is kind of in terms of the valuation. You can see that for every $1,000 move in the spot rate, you can see like a 12.5%. For this range, let's say, that you can see that the start price moves about 12.5%. So there is a lot of leverage there, and that's kind of one of the reasons why it went up so strong over the last week or two. And if the market turns and the spot rates start coming down, this one will go down just as fast as it went up. So instead of just exiting and being gone from this strong market in tanker rates, I decided to move into Tsakos Energy Navigation Limited. This is a company I've known for quite a long time. I first bought my initial shares, let's say, in Tsakos Energy Navigation at $4.33 in 2013, somewhere around here. And I ran it all the way up to the top, and I ran it all the way back down. And that was kind of mainly because I had no idea what I was doing, probably. But when I bought it, it kind of like hit me in the face. It was the right time to buy. It was around the Greek crisis, where the country was looking bad and shipping was looking bad. And I bought it then in 2013, thinking that this is a great play because look where it was, and look historically where the stock price has been relative to now. And yeah, that's kind of most of the reasons why I first got into it. I followed it ever since, not every conference call, but I've kind of kept up with what's going on. So I kind of understand what the management is thinking, how the management operates, what their strategies are, and I've seen over the years that they do care about their shareholders. They did their utmost to protect the shareholders on the downside, which is why they've been on charters for the last couple of years, rolling their charters. And one of the good things they do is when they're adding new ships, like other operators or shipping companies, they'll buy ships based upon some data, thinking about more demand in the future for their services, and they then buy speculatively the ships. And ultimately what they find out is everyone's looking at the same data, and they all order a new ship for two new clients, and then there's all these ships in excess, and then you get a crash in the market, kind of that kind of scenario. So what differentiates Tsakos Energy Navigation from Nordic American Tankers is really that they go into business relationships with like oil majors, blue chips, whatever you want to call them, companies like BP, Total, Shell, Exxon. They talk to them when those clients need a new vessel for an oil field that's coming online at some point in time to take the oil to the refinery or whatever. They talk to them and they will then, if that client is happy doing business with Tsakos Energy Navigation, Tsakos will order the vessel, and the only thing they ask in exchange is for an accretive long-term charter, which can be 3 years, 5 years. It really depends upon what the company is thinking at the time and what the client is willing to agree to. So, given that, they have managed to navigate the downturn quite well, and they've positioned themselves now for the upswing. The way they've positioned themselves is, first of all, if you listen to the management and you read the annual reports, there's always this talk about this super cycle coming in the shipping industry, and one could argue with this rise in the spot market of Suezmax tanker rates, that could be interpreted as a start of a super cycle. So the management is very bullish on shipping, and you then ask yourself, well, why do they have 65% of their ships on charters? If they're so bullish, why are they not 100% in the spot market, kind of like Nordic American Tankers is doing? And the reason for that is they are conservative. They have limited the downside, and you would think with the charters, of course, that they're limiting the upside. But the two reasons why that is not the case. The reason number one is that at one point in time, those charters are going to roll off, and then they'll be in the situation to decide whether they want to employ the vessels on the spot market or roll it into a new charter. And the charter will be at a high level, given that the rates are bullish, especially for Suezmaxes. I think they have 13 Suezmaxes, so they have quite a substantial exposure to that sector. The other reason why they have upside, and you would not necessarily think of it as upside with the charters in place, but you can see the stock price has started to move over the last couple of days, and it's of course underperformed Nordic American Tankers, but it's starting to move because they have something else in place, which is a profit sharing agreement. So it means that they have positioned the company to take advantage of the super cycle that they anticipated by having some upside, not as much of course as Nordic American Tankers, but they have some upside, and then when the charters roll off, they can go into the spot market, and then they can capitalize on the super cycle, right? That's kind of their idea. They're planning what they have positioned the company for over the last few years, and that is kind of why I'm moving into this stock. It's got less downside than Nordic American Tankers should we peak out and go down over the rest of the week and the rest of the month. It kind of limits my downside, and I did some analysis of the company, and it's a very complex and difficult to understand company, so there's probably good reason to assume that not many people have managed to analyze it yet or bothered to analyze it, and they probably just stick with what's working now, which is Nordic American Tankers, and they're kind of just leaving Tsakos on the sideline. So ultimately what I think is that the company is undervalued based upon looking what the charter rates are at right now. Going forward, if they roll their charters, they should be valued a bit higher than they are right now. And due to that, I think that this is a superior place to be at this point in time. If you remember, I talk about selecting the right vehicle for the right situation or the market conditions that exist at the time. That is what it's really about on this channel, is making the superior choice. And what that sometimes means is that if we are wrong about Suezmax tanker rates continuing to the upside and underperforming Nordic American Tankers with Tsakos Energy Navigation, then that is a potential outcome. But ultimately what it comes down to is that sometimes you have to lose to win, and winning is all that matters in the stock market. It doesn't matter whether you rode something to the top and right back down again. Nobody will shake your hand for doing the complete circle. So I'm going to leave it with that. Remember to leave your comments, questions and opinions in the comments section. Subscribe if you like this kind of content, and always remember that this is not investment advice or recommendation for you to buy or not to buy any of the securities mentioned in this video. So I'm going to leave it with that, and have a good day.